Good afternoon, traders. Today is the 4th of January. I'm jumping right into the action, looking at the E-minis, which bled down about 2 points today. It feels like we're down about 10 points, but basically we're just almost unchanged, and we're holding this 1262 support level, which is right at the 50 on the 1 hour time frame. So until we get and hold below 1262, the trend remains bullish. I have a Twitter account in case you guys didn't know. I haven't been using it lately. Just when I post the video, it will send you an alert, but I'm going to start getting on that again. So in case I do a video and I don't call out everything I see, or it's intraday, I usually only do 1 or 2 videos a day. You know, you could get the action right there. So if you guys have a Twitter, just go to it. If you want to create an account, it's free. So anyways, I'm looking at POT right here, and I'm very interested in taking a short on this, but it's only going to be maybe a 2-day short, being that Monsanto reports on Thursday, and that will definitely affect all the ag stocks. So right now I'm looking to take a long in GDX, which is the miners, and I'll get into that in one moment. We're looking at the gold futures here, and yesterday in the video I highlighted that you guys needed to be very cautious, and if you were long the futures, you needed to have a tight stop, because we were looking at a left shoulder, a head, and a right shoulder, which was fully completed today on large volume. See, the last 2 times that we were approaching previous highs, one being this, and then the second one, there were people jumping into this thinking that it was going to be an easy momentum trade, and then they blasted it up over this key psychological 1400, and then if you go back and look at the 1300 level, the same thing happened. In this case, it didn't happen. When things seem like they're too easy, that's when you need to be cautious and look at the trend from a contrarian view. So right now, our key support level for gold futures will be at 1378, where the 50-day moving average is. I wouldn't be surprised if we hold below 1400 to see 1350. So as of right now, if we break the 50 moving average, the trend will continue to be bearish short term, but overall Goldman says will be at 1700 by year end. That is why I'm looking to take a long on GDX, not for a long term play, only short term for a sympathy play. I'm looking to long 5 contracts right here of a very active call. This is the GDX chart, and I have support at 58.73. And this is the call that I have my bid in at. I'm looking to buy 5 contracts of the January 60 calls at 63 cents. Right now we just got a print of 91 cents. I'll let you guys know how this plays out in tomorrow's video. Looking at Apollo here, I'm out of my Apollo calls. I'm kind of disappointed, because yesterday I could have sold up here. I was watching this chart the entire day, but I didn't sell till right about here at the close around the 40 level. I still made a hefty profit, but I missed out on probably about $500-600 bucks. Sometimes you just got to take your profits quick, and this was only a short-term trade. I should have had more discipline. The reason it being a short-term trade is because they report on the 10th, and you guys need to pay close attention to this stock. I read an analyst report by UBS over the weekend, and they said that Apollo's going through a tough time right now with their balance sheet and stuff. So anytime you see a stock gap down big and then you start reading that kind of stuff in a balance sheet, it most likely indicates that the earnings call is more cautious to downside, meaning that all the analysts are starting to move their buy ratings down to underweight or sell. Majority of them are hold. So basically the only reason I got in this trade was because of a technical breakout, as you guys know, over 39. The strategy is working really well. And that's going to lead me into looking at Best Buy. I missed out on this trade as well. Looks like Cisco, looks like Visa. It's all setting up the same way. Looking at the daily chart right here. Yesterday we had some volume seep in. It was above the 100-day volume average, which showed me that people were getting interested in this stock again and maybe running up to this prior gap fill at 36.57. Today the 36 calls are very active, and there's a good chance I may get involved with this if we could bounce off the 34.80 level and stick. So what I'm looking for is for us to move down here, maybe consolidate, maybe even peek their head below, but snap back up and get some volume for the higher move up to the higher levels. Another stock that's kind of the same situation, not as Best Buy or anything, is VRX. And certain stocks, when they gap down, you either have a bearish gap or you have a bullish gap, and I'm going to show you the difference. First I'll show you OCLR, because this is a prime example. Okay, so OCLR gap down from $13 a share all the way to $8.50. Alright, so most likely you would be looking to get the fill right here like we've seen in everything. When you see a bullish gap, they really don't bleed it past the prior low that we first put in, and they quickly, within a week or two time frame, run it back above the gap high. When that happens, you draw your line above the gap high and you draw a line above the gap low. This indicates the range. When we break above the range, as we did right here, this line becomes support. Then we consolidate above this and we continue up. And now you see we filled the entire gap and we're above the 200-day moving average. Same thing with VRX. Okay. So we look at VRX. We come down here. The gap high was around 26.10, and then we draw it at the gap low. Now sometimes they won't trade exactly the way you want them to, but you just have to have discipline and have a tight stop, and you won't get burned. And when you do see the breakouts, like as you did right here, you will make more as if you got stopped out right here below the previous gap low. Alright, so anyways, when we gap above here, this becomes our support, and you see this is major support always. Look at this, we filled it there when we gapped down. That was a trade, and then we gapped up, and now we're moving up once again. So right now this chart's looking very good. We've continued, besides this one little bullish consolidation where the smart money entered, we continued to make higher highs, and now this could be a higher low. The 5 starting to ascend and the 20s moving back up. So this thing could get interesting. Just keep this on your radar as well. Next we're looking at DVA. Now this isn't a very high beta stock, but it looks like it's getting ready to make a move with a declining 20-day moving average right here that we could pop above in the next 2 days. It would be a hard thrust to get back up to the 50-day moving average, which will most likely happen at 71.54. I'm not recommended this for a swing trade, only a day trade, unless you have enough buying power to buy 500, 1,000 shares of this, which not a lot of people do, because that's $70,000. Or you could buy some contracts, but the reason I said you'd want to buy shares is because these contracts aren't very liquid. So anyways, next one we're looking at is Tiffany's. And Tiffany's has had an amazing run from 40 all the way to 65 since the September low, and all the moving averages have been bullish. On a short-term time frame, when the 20 started declining, that indicated that we should get short on this. Now we had a bounce above the 50. Strong stocks will hold the 50 and they won't go below it. So one of two things are going to happen. One, we continue to consolidate above the 50, move back up. Not saying that we will test this previous high, but as long as we could get back up to the 63 level, it will look good. Or we come down here and we break below the 50 and the 50 just wraps around and starts declining, which will lead for a greater move back to probably this low around 54 or 50. Next we're looking at Simon Properties, looking bearish here, continue to make lower highs. This could remind you of the LVS chart, which is kind of the same thing. You see support pretty much at the 100-day moving average. You see a declining trend line. So what we're going to look for is to test the 100, maybe consolidate a little bit and then get a breakout. I'm going to show you an example. If you're trading this on an intraday time frame, we are below the 50 on the 1 hour, so that determines a short-term bearish trend. If you want to take a long, I don't think it would be a bad idea for a scalp if you see some buying off this 97.73 level. So if you see some, maybe you could get a move, make an easy 1.5. But if you see some more selling come through, we're looking for 95.97 to be our next support level. Another one that looks short-term bearish is Schlumberger. This thing's had a massive move from 54 to 84 in just a few months. We broke below the 50. The 83.07 was our short trigger. It was not only a key level, but it was right where the 50 was at, so this was definitely a low-risk trade. Right now, we have to hold 81.97 above it for us to get a move back up to 83.07, which could be a short. So what you'd like to see is a move back up, retest it, move here. That's where you imply your short and you just ride this thing out and start taking profits. Because if it's strong, it won't move past the prior low. Now another thing you could see is maybe get a little consolidation here, but if we hold below this maroon colored line, which is a major pivot level at 81.97, mark this price level on your charts, we can move down and then test our next support at 80.77, and then we'll just keep going down until we get to the 50-day moving average. A lot of these oil service stocks and resource exploration stocks are looking the same. This chart is almost identical to Schlumberger. The symbol's NFX, New Field Exploration, and we're at a nice critical level at 71.06 here. Mark this on your chart. Same scenario, if we could bounce off this, look for a move back up to 72.08, which the 50 will be at by the time it gets there, or if we break below it, look for a retest and head lower. Commodities are very weak today, which is most likely leading the market down. And before I show you the crude oil chart, we're looking at Whirlpool, and I want to start highlighting certain things for you. Look at these calls right here. Somebody went to the February calls and they purchased 4,600 of the 95 calls, and then they purchased 9,200 of the 105 calls, and most of this being new positions. So Whirlpool is definitely on our radar. Maybe they think that we're going to hold the 200-day moving average, consolidate above it, and then get a blast higher. I'm not sure, but we need to be watching this one closely. Morgan Stanley will be one of my next stocks that I take a long on, just to let you guys know. Keep looking at the call options, and I'm going to look to take a long if it gets back to 27.63. That will be our trigger price for Morgan Stanley. And last, I'm looking at crude oil. Definitely got some major selling today. 89.02 is our price level. Mark that on your charts. We need to hold that for a move higher. I think we could get maybe a short-term bounce off that. But even though we've had this major move down, we're still at the November high support. and that's right around where this 89.03 level is. Anyways, good luck trading, guys, and I'll get you out a video on the commodities either tonight or tomorrow.